Hello everyone, welcome to the Elliottwave.com YouTube channel. So here is a quick update on the long-term outlook of the gold to silver ratio. Now this ratio is kind of interesting and important because by analyzing this ratio, you can also try to figure out the direction of the underlying metals, so the underlying gold and silver direction as well. So typically this is inverse to the underlying metals. In other words, if the ratio goes up, then the price of the metals, the price of gold and the price of silver will go down, and vice versa if the ratio goes down, and then the price of the gold and silver will go up. Now technically I'm starting with the monthly time frame here. You can see that we sort of topped out around this level quite, for several years, right? For 2 decades actually, right? From 2000 here, which is around 80 something, right? And we are right here basically pretty much in line with the previous 2 decades or so. Now there was the data for this particular instrument only went back as far as the 1997, but actually this ratio should go even before that, because gold silver has already existed a long time ago. Now but basically prior to the 1970, before the US runs into a complete fiat system, the ratio is significantly lower. But then after 70s, then the ratio started to basically go higher, right? And this one here was a spike over here during the COVID-19. I believe we will not repeat this ratio anymore, which is like around 127. This is truly a spike, and this marks the significant low in the indices as well. I mean, if you look at all the other instruments, whether you're looking at the yen, the USD, the indices, and so on, try to find the 2020 low to 2020. You will either find a major high or a major low in many asset classes. So this is truly, I believe we're not going to be going anywhere near this level, especially with the current condition here, right? And so what happens though is, technically speaking, we are actually not really, it's neither bearish or bullish, right? We got this 3 pullback here, 1, 2, 3, but we could have counted this as an ABC, right? And then we might actually rally higher, right? But for one reason or another, it seems to me that I think the more likely scenario at this stage is actually going down. Now again, we don't have the confirmation yet, specifically until it breaks at least below this low, or better yet below this low, right? That will determine for sure the next direction in the ratio for the next couple of years. But judging by gold already breaking to new high almost the whole month this year, right? Almost like every day we have new high in gold, and I don't expect suddenly to reverse lower after breaking such a very important high in the 2000. So it looks to me the most likely scenario is that this ratio is going to go down. Now the reason this ratio has not gone down that much, even though gold and silver, gold especially, continues to make new high, is because silver has not participated that much of the rally. But then I think silver is famous to be lagging gold. So once silver catches up, this ratio is going to go down, and then silver is going to start to outperform gold, which is typically how it goes. Gold moves first, and then silver follows. Now, so that's kind of sort of from the very long-term perspective, and this is of course is going to be multi-year event here because we are looking at the monthly time frame. Now, if I go down to the daily, this is the proposed count. So this is the spike during the 2020 COVID-19. From there, we can label this as a 5 ways down. We can see a divergence here, right? We can see divergence on the last move down here with 5. Typically, that is indication that is some sort of with 5. And then from there, we have an ABC rally, and it reacted from the area where it is supposed to react, which is the 100% extension. So that is kind of telling us, suggesting that eventually at some point we might potentially break below this low again. Again, if this is a bullish market, this would have been 1 2 3 4 5. The with 3 would have been 1.618 with a 4 and a 5. But the fact that we can label it this way, 3 swings and then reacting from the 100%, well, that is sort of suggesting that the rally is corrective, and eventually at some point it's going to break again below here. But the problem is, we are kind of, since this peak here in 2022, it's been almost 3 years. We've been sort of sideways, right? Sideways. I mean, it's going back and forth with not really a lot of changes, not really trending that much. So yeah, honestly, cannot get too excited with this kind of outlook, but it can change very quickly, right? Things can change very quickly, and I do think that the more likely scenario, instead of rallying like this, which requires gold to maybe go back below 2000, or silver goes back to, you know, like below 15, right, or something like that, then the more likely scenario is this is actually starting to go lower, right? And this one is looking like a consolidation since 2021, which has been broken here earlier this year, but then since then it has rallied quite, you know, aggressively to stay within the same range again, only to get rejected again lately, and, you know, starting to break down again. So we'll see how it goes, but it does seems to suggest with gold, you know, looking bullish, it is not as likely to continue to go higher, which requires gold to continue to go down a lot. And I think it will be better to label it this way and expect this to start to turn lower pretty soon. So we'll see how it goes when it starts to turn lower and break below 1. I think we will have even better confirmation. Then we will have a 1 2 3 4 5 swing, and that will sort of confirm the bearish bias. And then if it breaks below here, then that obviously is going to be a bearish sequence with a lower low. Okay, now what will be a long-term target that I have? So if I go up into the monthly, if we're measuring extension here, I do believe this ratio is neither always bullish nor is always bearish. It's a ratio, so I expect this to be in a range for many decades to come, right? Sometimes it can spike to the upside, spike to the downside, but it is going to be in a range. I don't think it's always going to be bullish, just like, let's say, if you think about it, indices or stock will always be bullish, right? Unless the company goes bankrupt. Property price is always going to be bullish overall. If they can have a very significant correction, but eventually, if you're looking at 200 years, it's always going to be bullish, right? It's going to rise because it is limited, you know, land is limited, and then inflation and so on. So it's always going to be rising. But this ratio, this is neither always bullish nor always bearish. So it's going to be always in a range, you know, if you're looking at long enough time frame. Now, in the next few years, I think the more likely scenario is that this is going to go to the lower end of the range again. So if we look at this 100% extension here, I'm looking at going back to around 30, right? 30 is my target. Now that could happen at the end of this decade, for example, or maybe going into mid 1930, who knows? But I think, or it could be faster, you know, it could be faster. So you never know. The timing is really difficult, but eventually we can go to the lower end again, around 30, right? And that will be sort of where you should be careful when we reach around 30. So then the rally in gold, the rally in silver could be near ending when we are near the 30 level here in the gold to silver ratio. So if you find gold continues to make new high and you don't know when it's going to end, actually look at the ratio. When the ratio starts to go to around 30, then I think you have to be careful chasing the rally in gold, chasing the rally in silver. As you can see, we are nowhere near 30. We have still a long way to go. So that means actually gold still has a long way to the upside, right? A long way to the silver as well, in a way. Okay, silver is even more because silver has not caught up with gold so far. Okay, so so that's basically the long-term outlook that I can see in this ratio, right? So I wrote a blog on this article, but this video actually explains everything that you need to know. And that's it, guys. So we do cover gold and silver in our service. We just don't cover this ratio, but we do cover gold and silver in group 1. And again, we are currently running promotion trial, only 99 cents. If you want to try to check our service, it's a good time to do it. Available if you are completely new, you have not been our member before, or you have not taken trial before. Okay, so see you all again next time, and have a nice day, everyone.